Welcome. In this video, has XCN coin started to rise? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. In the previous video, we specifically mentioned that if the descending trend is broken, the price could move upwards. As expected, the price broke through this critical trend line and experienced a strong upward movement. In cases like these, where a descending trend is broken, it's anticipated that buyers will enter the market more strongly, and that's exactly what we've witnessed. The upward momentum after the breakout indicates that the market is shifting in favor of buyers, and the selling pressure is weakening. Now there's a new descending trend in front of the price. As you can clearly see on the chart, the price has touched this trend line multiple times, but hasn't managed to break it yet. The most recent touch saw sellers stepping in, pushing the price lower. This shows that this level is still acting as a strong resistance. However, the key point is this: the more often a resistance level is tested, the more likely it is to weaken. If the price returns to this level and breaks the trend upwards without a strong selling reaction, we might witness a larger upward movement in the near future. At this point, past data can be a helpful guide. After the previous descending trend was broken, the price experienced a strong upward rally. The same could apply to this new descending trend. If the price breaks this trend line upwards, it could boost investor confidence and encourage more buyers to enter the market. As a result, a much larger rally could become more likely. Moreover, the breaking of descending trends often signals a market shift. Many investors view trend breakouts as strong buying opportunities. Therefore, once the price surpasses this critical trend line, more investors might enter the market, driving the price higher. This could lead to continued upward movement in both the short and medium term. Another crucial point to watch at this stage is how the price breaks this trend line. If the breakout happens with strong volume and determination, there's a high likelihood that the price will hold above this level and continue its upward movement. However, if the breakout is weak, the price might move lower again, testing support levels. Currently, looking at the market's movements, we can see that the price is approaching this descending trend line and is preparing to test it. If the price breaks this trend line, it will create a very positive outlook for investors. In cases like this, when descending trends are broken, the price usually starts with an upward wave, then slightly pulls back to test the broken trend line before resuming the upward movement. But as I always say, we can't just rely on trends. We need to look at other metrics as well. Stay tuned. The Elliott wave theory is an analytical method that suggests the market moves in specific psychological cycles, and these cycles follow a distinct mathematical structure. According to this theory, an upward or downward trend in the market consists of 5 main waves, and each wave has its own unique characteristics. At this stage, by carefully analyzing the price movements, we can clearly see that the market has completed the first wave and is now heading towards the second wave. At this point, it's important to remember that the second wave is, by nature, a corrective wave. This means that after the upward movement during the first wave, the market naturally pulls back to establish a new equilibrium. This is a critical phase where the major players in the market are strengthening their positions and preparing for a larger move. However, determining how deep this correction will be and at which levels it will end are some of the key factors that investors should closely monitor. This is where Fibonacci retracement levels come into play. Fibonacci levels are an important tool that shows where the price might find support based on the mathematical ratios inherent in the market. Specifically, the Fibonacci 0,618 and 0,786 levels are crucial for predicting where the price might pause during the second wave. Since the market has previously shown strong buying reactions at these levels, pullbacks to these levels are generally considered healthy corrective moves. At this stage, the most important point to watch is whether the price reaches the Fibonacci 0,618 and 0,786 levels, and how the price responds at these levels. If the price retraces to these levels and then begins to recover with strong buying activity, this could be a very positive signal for the start of the third wave. According to Elliott wave theory, the third wave is the strongest and most powerful upward movement in the market. This wave often sees the largest price movements, making it one of the most profitable phases for investors. In addition, volume analysis should also be carefully observed. Typically, during the second wave, when the price is falling, trading volume tends to decrease, and the market is expected to pause at some point and signal a potential trend reversal. If the price finds support at the Fibonacci 0,618 or 0,786 levels, and trading volume increases, this could indicate that major players are starting to buy and that the third wave is about to begin. The increase in volume would be a critical signal that the market is preparing for a new bullish trend. In summary, according to the Elliott wave theory, The market is currently in the second wave correction phase, and whether the price finds support at the Fibonacci 0,618, 0,786 levels is a critical issue. If the price shows strong buying reactions at these levels, we could see a much larger and stronger upward movement as the third wave begins. Therefore, we will wait for the completion of the second wave. Looking at the price movements in the market over a long period, we can observe a clear downtrend, with the price consistently making lower highs and lower lows from the peak area. This is typical bear market behavior, indicating that sellers are in control. Every attempt to rise falls below the previous high, and the price keeps moving lower. However, there has been a significant change in the recent price action that is worth noting. First and foremost, something we haven't seen before in the recent price movements happened. The price moved above the previous high, creating a new higher peak. This is a critical development because it often signals the beginning of an uptrend. In a downtrend, price movements typically form lower highs and lower lows, whereas in a transition to an uptrend, higher highs and higher lows begin to emerge. If the price continues its movement and breaks above the previous low, forming a new higher low, it would be a strong signal that the market has transitioned from a downtrend to an uptrend. At this point, one of the key factors that investors should focus on is how strong this upward move is. In other words, whether the price is just making a temporary rise or truly establishing a new trend should be confirmed by technical indicators, such as trading volume. If the price makes a new higher high and the trading volume increases, this provides stronger evidence that the move represents a genuine trend reversal. However, if the volume is low and the price shows signs of weakness while rising, then caution should be exercised, as the sustainability of this rise may be uncertain. Currently, when evaluating the price action, we are receiving important signals that the downtrend may be coming to an end. However, to confirm whether this is truly a trend reversal, it will be critical for the price to make a new higher low and maintain previous support levels. If this occurs, we can officially state that the downtrend has ended and a new uptrend has begun. During this process, it is essential for investors to closely monitor both technical indicators and market sentiment. If the price demonstrates a strong trend change, it is quite likely that the upward movement will continue, and larger moves in the market will start. Particularly, observing whether institutional investors and whales are entering the market can be a determining factor for the sustainability of the trend. If large players support this rise, the likelihood of the price movement evolving into a longer-term uptrend will increase. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.